Welcome back, traders and investors. We have Rachel Shasha on the line. She is a trader and blogger at Sassy Options. Rachel, how are you doing this morning?
I'm great. Thank you for asking.
So, to get started, tell me how you played the Open yesterday.
Well, so I actually had come in from the weekend holding IWM calls, and in hindsight, too, I should have sold them on Monday, but I didn't. I held on, and oddly, they actually went back into profit yesterday after that huge rally. So turned out okay. So, but how I played it was the only thing I didn't do anything new. Uh, I had some Yelp puts, so I sold the Yelp puts, and then just watched and waited to see if the dip was bought.
And with the IWM position, you had to go quite a bit against you when it came back. Did you hit the exit button or take some of it off? Because if you came in from Friday over the weekend, Monday, you probably took some pretty good heat on it. Did you try and wiggle out of it, or is there something you're holding on to?
Nope, didn't touch it. Just watched IWM the Russell and just and then I started seeing it not making a new low, and then I felt a lot more comfortable with it.
Did you,
But
did
no, I didn't. I didn't shake. I didn't get shaken out of it. I mean,
uh
I probably should have sold it on Monday, but that hindsight, like I said, is 2020 stuff.
Did like when you get something like that, I know you do like to pay attention to the charts here, and I'm just looking. Did you look at this 115 level? Because I'm looking at this on my daily chart, and it just kind of stood out to me. It had 3 4 lows in that area. Went to 114.74 yesterday. I see a couple other lows under 115. Was that kind of like your barometer? Like, if 115 holds, I can hold into it, or do you manage it from from like a risk reward dollar amount standpoint?
Yeah, I guess both. I would say. I I did watch those levels. I saw that it didn't, end up hitting the 200-day. Kind of kept above the previous low from around November. So, I mean, I was watching picks. I was watching Brett. I guess it wasn't just one thing. And plus, I think it's also something that I want to hold into the new year. So, I mean, the Russell sells off, and especially when it sells off that quickly, when the market's selling off that quickly, I try not to panic because when it's that quick, I just feel like it's people jumping out, not necessarily like long term, players. It's just people like short term players just jumping out real quick.
Rachel, what are your expectations going into the new year?
Well, I think that we are going to have the Santa rally, but I don't necessarily know if it's going to be across the board. I I'm definitely looking right now to hold the Russell or options in IWM through January, and then I also actually want to hold some TLT because I think that interest rates do go lower. So um, for the new year, I don't. I think that the Russell um, will outperform SPY or the S&P. And I think that I don't know we could be in for maybe one more dip before into next week. I'm not really sure about that, so I'm watching for it. But I don't know. I mean, I think that if 204 holds, then that's probably it for the rest of the year, unless we get like a little surprise.
So you think rates are going to go lower?
Yes.
What's your case for that? What makes you think that?
Um. Well, I think that history has shown that when QEN rates go lower, so I'm going off that one. I'm going off rates going lower around the world, and people worried about deflation in Europe and whatnot. And I think that a lot of money from overseas is also going to come into our bonds. And I think people also want to feel some safety. You know.
It seems to really be a contrarian belief there. I mean, talking to Sheldon McIntyre of Her Capital, we had him on the show earlier in the week, and he's just kind of the belief that he thinks that the Fed just may want to test the waters just a little bit to see how the market reacts. Because if you think about it, the longer they hold off on interest rates going up in any fashion, the more of a pronounced effect it's going to have when it finally does. And then also following up on that, uh, are you looking at it because you think that the perceived strength that we're getting from these unemployment numbers and the GDP numbers are really, really masking an economy that's not as strong as everyone thinks?
So to your first point, I do feel it is contrarian, but sometimes that works, just being the contrarian. And also, I don't know, maybe they will do some kind of little testing, but I also feel like anytime they throw even things like we're going to take out considerable time, like people throw a tantrum, and I don't necessarily know they want to test the waters on that. And then also to your point about what the reaction will be like when they do if they wait longer, I don't necessarily know that. I don't think anyone knows how the reaction is going to be. Maybe if they wait long enough, people will just have a muted reaction. Also, about what was the second point about about how like is it masking the economy?
Yeah.
I don't think so. I don't think so necessarily. I do think we are recovering. I just also think that people still want to have some safety, and I think that bonds can go up at the same time as the market they have before, and I think again because of the rest of the world where we're at, I think the U.S. is a little bit safer to park your money, and not everyone wants to just throw it into an ETF or a mutual fund, or some people rather just have it in bonds where it's a little bit safer and they can kind of hold on to it.
I know you don't really trade commodities a whole lot, but boy, oh boy, you could always trade the USO, oil,
Hmm.
some of the oil stocks. Have you gotten down and dirty in the energy sector?
No, but I've been thinking about it. I think that there is a decent bounce coming. I wouldn't want to hold it. I wouldn't want to put a long term position there, but I definitely think a decent bounce is coming, probably soon and probably into January. Um, and what I would do for that is I would probably pick, some of the top names in energy as opposed to just, going into one of the commodities itself, like maybe Exxon or what's another one? Maybe like I don't know. I can't think off the top of my head to be honest, but I can list
Exxon or
some for you if
Chevron?
you want.
Okay. And how would you play it? I mean, I know you like to use the options market. And
Options.
let's just go. Just for an example, and I know this is no recommendation or nothing that you're putting on right now.
Right.
And the one thing that I pointed out to Dennis the other day, with the Exxon Mobil, it moves with oil. It doesn't move perfectly with oil, tick for tick. But what you had here in ExxonMobil is you went down to 90.11. This was on November 28th, a nice round number like 90. And at that point, crude had made a low on that day. It was back up. Boy, it was quite. What day did I say that low was made? On the 11th, on November 11th. At that time, crude was quite a bit higher. Crude has went on to make new lows for the move, but ExxonMobil hasn't. So I don't know if that's showing a little relative strength vis-a-vis. But just taking a look at this ExxonMobil chart, you see the good support at 90 here. Just give us an example. Would you sell some puts to get comfortable with a position where you would want to take it long? Would you go outright calls, call spread, strangle if you really thought it was going to move, straddle?
I mean, I think the most simple, which is what I like to do, is maybe just outright calls. But I would definitely go a little bit further out to give yourself time, and just put a stop in there. I want to play a little bit more safe than just like trying to lotto it or gamble it, and maybe pick something close to in the money or in the money, and just kind of trail it that way. Pick something maybe out into February options, and then maybe even sell calls against it weekly
Okay.
or whatever. So I'm looking at some names. I would, things like XOM, maybe EOG, HAL. TSO. Those are ones I like
Okay, let's
that
talk.
I would
Yeah,
choose to
let's
play
t-
them.
let's talk about TSO for a second because I know that that popped up in the chart. Now here's one. Boy, oh boy, when you look at this vis-a-vis the other things, I mean, this thing is held up really, really well here. If you look at those other charts here, so do you think you'd be more inclined if you're looking for a recovery in something that's held up better, or would you go for something with a little more juice that's really gotten beat up? Maybe perhaps this one hasn't gotten beat up as much because maybe it's not as part of biggest part of the indexes or less exposure to oil, or maybe they have some really good hedges on. Which one are you more inclined? I know I'm always looking for the ones that are more beat up, but sometimes it's good to go to the ones that have held up good.
Right. I think I would probably go. That's a tough one. I think I would probably go to a medium one. So one that's
Okay.
kind of held, not one making new highs, but maybe one that's held fairly decent, and is maybe on support. Maybe has tried to crack support a couple times, but hasn't really done it. And then I would probably do it in that way. I think that like the internals of the energy sector are improving versus the actual price. So like I think more or less names are making new lows recently and whatnot. And so I think, that stands to a potential recovery. But I definitely wouldn't go. I don't know if I'd bottom pick completely. I don't think I would go for the lowest one or the one that's like the most beat up. I would more likely take, and I would also look at, like I said, the fundamentals. Like I like those companies better, not just the charts. Like I think they're more, they have more exposure. They to things that are less exposure. I mean, to like not actual oil part of it, or they have dividends, or just something that also gives it a catalyst.
Okay, so you like to do your fundamental work as well. How do you do that?
Right, like EOG, I like a lot, and if you notice, it has been making higher lows. So that might be one that I would go
Okay,
for.
there you go. Yep, higher lows similar to the ExxonMobil chart. Well, guess what stock I'm going to ask you about next?
Um, Goldman Sachs.
Oh man, is she smart? Okay, and I got to give you credit on this one because can't remember the exact date when you were on the show last, but I believe you were saying if as long as it held 185, you liked it, and lo and behold, we went down there and we made a low just above 185. Now you've had a great sprint up in the market, approaching the $200 level. Actually, not only Goldman Sachs, but a lot of the other financials have been strong as late. Really recovered from along with a lot of the market yesterday from a
Right.
much lower open. What do you think? Is this thing looking a little frothy to you? Are you still going with the uptrend?
I think it looks good, actually. This is, yesterday to my subscribers, because of the open interest, I said that I was pretty confident that it would get back above 195 and then stay above 195. And I think that that's actually going to be a good barometer for the rest of the week. If it could stay above 195, I think the market is fine. If it starts to go below 195, I would be a little wary, especially now because financials have been picking up a lot since Friday. I think it's a good barometer. So I mean, my guess is that it closes probably Goldman Sachs, around 197, between 197 and 200. I would say probably closer to 197, but I think that it's fine as long as it stays above 195 right now.
We have some other guests that talk about the open interest and options and how they use it to interpret the market. Do you mind just you used it there in your last explanation of your interpretation of Goldman Sachs? Could you just go about how you use it?
So it depends on what stock, and actually I've been tailoring the way I use it. But for the most part, I will look to see where the highest calls and highest puts are, and I will look every day to see how it shifted, if it shifted or changed. And then I'll kind of see like what the range is like. So if there's like really high calls at 200 and really high puts at 195, then the range to me is like 195 to 200. And if it gets outside of that range and it does not stay outside of the range, it starts to move, then I think it goes back in the range. If it stays too long outside the range, I think it actually goes more in that direction. So for example, on Friday, I would say it was, it got over the highest calls, pretty quickly, and it stayed above it. And to me, that meant rally is sticking in Goldman Sachs. And probably going even further, because once it stays above it, and those people, who are delta hedging, the market makers, are going to now buy up Goldman Sachs. So it increases how much is bought. So it depends if it gets over. Like if it gets over or not, I monitor the highest calls or puts, and especially at the end of the week. But if it gets over, I monitor how it's reacting. Is it staying above it, or is it going right back down?
Any
Or
thoughts?
on the put side, the same thing. So yesterday, there was lots of puts at 195. So if it had stayed below 195, I thought it was going to be pretty bearish for the market. But as it started to recover and get back into that range or above 195, I thought, okay, the market's fine.
Rachel, we've got you for a few more minutes here. Want to see if you have any thoughts on Twitter.
Ooh. It's funny. Someone asked me over Twitter this weekend what my thought was, because he was down in his position pretty bad, and I didn't really like it, to be honest. But now it's looking a little bit better. I don't know. I think it's looking better. I mean, I guess if you're inclined to go long it, this would be a good place to try to build a position. So, obviously it has potential to go back to around 30, where there was a bottom around May. But if it can hold here, if this week it can get above 39, I'd say, then I think it might be okay into the new year. So I would look to see if we can get above 39.
We've had Rachel Shasha on the line. She's a trader and the author of Sassy Options. Rachel, thank you very much for joining us today. We'll have to bring you back on after the new year.
Thank you for having me.